Farm is by yours truly. And I love the red sticker. How many of you love when you go to a store and you go straight to the back? Doesn't mean that the bad stuff is in the back. It just means that it's on sale, right? So tonight, the information that we're going to give out is free 99. How about that? All right. So life insurance options after age 60. How many of us have come across people, or maybe we ourselves might be in the position where we feel like there is no hope by the time we reach age 60, right? Well, let's just get back to the basics for a second. What is the purpose of life insurance? A lot of times I feel like people don't quite understand what the purpose of life insurance. And if you don't know what the purpose of the thing is, it's kind of hard for you to stay locked in. You know, we know the chairs are meant to hold us when we sit, so we have no problem in trusting or believing in the power of a chair, right? So if we can get back to the basics of what is the purpose of life insurance, I believe that it will give us an opportunity to get past the weeds that are in the beginning of every conversation that we have with people about life insurance. One, the purpose of life insurance is to provide financial protection and peace of mind for your loved ones in the event of your death. A lot of times we think about financial protection as far as, you know, having the extra money in order to have that proper burial, but we don't think about the peace that we rob our loved ones of when we don't leave enough. You know, a lot of times we leave and there's no lifestyle protection, which means that someone has to move or someone can't live the way they used to live. There's no income replacement. You already couldn't make it on the two incomes. Now you have to try to figure out how to do it on one. There's no legacy to build. There's nothing to leave behind. There's definitely not any wealth transfer from generation to generation. And we haven't even scratched the surface talking about lifetime tax-free retirement income. Most of the time, when we talk about life insurance with anyone that's after age 60, there's these big old obstacles. As you get older, it is still possible to get good life insurance coverage. Most people don't realize that it is, but there are common obstacles or even challenges that can make it more complicated or even more expensive. What are those obstacles? I'm so glad you asked. One is health issues. You know, when you were in your 20s and your 30s, or even when you came out as a baby, most of us didn't have any health issues. But by the time we reach age 20 or 30 or 40 and life starts happening and our diet and our stress levels, we have health issues. So we can't even qualify for insurance anymore. Or waiting causes us to have higher premiums. Your premiums will be no less expensive than they are right now today. Usually your health, it will be, some of us can kind of turn things around, but still with underwriting, it can be very intrusive at age 60 or above. And then we're even limited to our policy options. We may want this policy, but because of our age, we only have the opportunity to get that policy. And remember, the goal of life insurance, we learned this last week with BD Erica, is to ensure that your loved ones aren't left with your financial obligations. I remember my dad passed away, and he was responsible enough to leave us with great insurance. So we were able to benefit from that. And so we, were able to give him a really good homegoing celebration. And then we were able to do some things, but the creditors kept calling. And finally, I just had to give them the address to the VA cemetery because I'm like, he ain't here. Oh, y'all know that was funny. It was funny to me. But we can't leave our loved ones with financial obligations. We want to leave a clean slate. We don't want to leave a person, my mom used to say, I'm better off dead than I am alive. And I'm like, what do you mean by that? And what she meant is that I'm setting myself up so that when I'm not here, I won't be a burden on you financially. And boy, did she live up to that. And I'm so grateful for that. I missed her, but I don't have to worry about trying to make the ends meet when they're just really waving because she's not here and I counted on her income. When we think about life insurance after age 60, we really have to think about our why. We have the foundation of what is the purpose of insurance, But why do I need insurance? Why specifically would I need insurance after 60? Well, we learned from SUNY that your why simply means what hurts you. Not enough money equals a need for income replacement. If you don't have enough money, that means that you need income replacement. But really, why is it so important that we have life insurance? Your income likely covers essential day-to-day needs, such as rent or mortgage payments, utilities, groceries, transportation, childcare, or school expenses. You say, whoa, whoa, whoa. Aren't we talking about 60-year-olds? Well, in our culture, a lot of us as grandparents are taking care of the childcare and the school expenses of our grandchildren. Or even some of our children that are still in college, we're helping them. How about medical and insurance costs? I got a bill from my cousin for the ambulance. That's not even the care once she got there. And one of the ambulance bills was $260, and the other one was $2,881. Y'all make that make sense to me. And also saving for our future. Without our income, our loved ones might struggle to maintain their lifestyle or even meet monthly bills. That is very sad, but it's also very true. Now, what can we do? What do we have to look forward to when we think about life after 60 regarding insurance? Well, let me just talk about our resources. Sometimes we forget to pool our resources. And so when you look at your life at the typical age of 60, you're looking at your pension or your Social Security. And I'm here to tell you guys, if you haven't figured it out yet, there's not very many companies that even offer a pension anymore. So if you got a pension, or even if Social Security's going to be there, I looked up the numbers. I'm a data girl. And an average person in America is getting about $1,600 a month in Social Security or pension. But how many of you know people who are getting way less than that? So even at $1,600, it's not enough. Let's talk about income replacement. On an average $50,000 a year lifestyle. And how many of you all know that that's not very much when you're trying to cut that pie into a lot of different ways? With the average income replacement of $50,000 a year, you're looking at $4,166.67 pre-tax. That's not even realistic to try to live off of. Let's talk about mortgage payoff. A lot of times when we look at Social Security and pensions and things like that, what they're assuming is that your house is already paid off, that your car is already paid off. Well, how many of you have ever paid off a car and it didn't last forever? You probably can live in the house forever if you make sure the pipes don't burst and, you try to get a new air conditioner every now and then. But how many of you know the cars do not last forever? So even the average 60-year-old has a mortgage left of $150,000 to $200,000. And how many of you know that that's not the plan? That is not the plan when you sit down and you sign that mortgage agreement of 30 years. What about education? We talked about educating the grandkids, but some of us at 60 still have existing loans from a dream education that we had long time ago. And most of us are not even working in that field anymore. And the average person at 60 years old is still carrying an education expense alone of $40,000 to $50,000. And guess what? That's not even a concern. Because at the end of the day, you're taking care of the what do we call it? The essential and the non-essentials. Education and existing loans are typically a non-essential. And we know that hurts our credit. How can you get a government loan for a house when you owe the government for an education? So your total income replacement need before you even come out the gate is going to be about $2,566.67. That's if you're on an average $50,000 a year lifestyle. So now that I've thoroughly depressed you, I want to remind you that there is hope for your future. But you have to get off your butt. What do you mean by that? That sounds very harsh. I hear often, but I'm on a fixed income. but I can't afford to save. But, 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 if you're on a fixed income, then we need to unfix it. Okay? And we can talk about that later. If you say that you can't afford to save, my rebuttal to that is you can't afford not to save. Because my baby girl, she loves me. My son-in-law makes sure that I have flowers every Mother's Day, and he honors me for my birthday. But I'm telling you guys, if something were to happen to me and I didn't leave this place, between the two of them, I'm going to be in trouble. They love me, but as Tina Turner say, what love got to do with it? We have to get off of our butts and do something different, okay? So what are our options? What are our options? We're still talking about life insurance after age 60. Some of us, maybe we started too late. Some of us didn't start at all. But what you can do, your options, number one, you can keep the policy that you have. Some of us have policies that our parents pulled out for us, or maybe we started it, not that one that's on your job, because that's going to be gone when you leave, unless you took out something that was supplemental and that you're paying for it extra. Go ahead and keep that, because when you applied for that, your health was probably great and the premium was probably low. What you want to do is you want to keep that, and then you want to add more financial solutions. And we're here to help you with that. You know what? I didn't do this on purpose, but I believe all of these are number one great options. It said 1, 2, and 3, but I didn't proof my slides, so charge it to my head, not my heart. I really intended to make it 1, 2, and 3. All right. But the second option that you have, you can create a mix. And no one's probably ever told you this before. So you tell your friends and family, I want you to lean in, because this is probably the first time you ever heard this on the Totally Lit Forum, is that you can do something like a 20-year term policy, a 10-year term policy to give yourself time, because if you're not protected, you need to get protected. No more fish dinners, no more chicken dinners, no more GoFunds, when you don't even get all the money on the GoFund anyway. Facebook keeps some of it. But you want to get yourself a 20-year term policy, a 10-year term policy, something to protect you right now. And you want to get to work with an indexed annuity so that you can set money aside over the next 10, 15, or 20 years. And if you can set yourself up for success. Well, what if your health won't get it? Because your health is your wealth. So many people get turned away because they can't qualify for health insurance. But here on the Totally Lit Foundation, with all of the experience that we have here, there are ways. We turn over every rock to make sure that we have a solution for your problem. One of your options could be get a guaranteed issue life policy, and then mix that with an indexed annuity, and that could be the secret sauce for your success. What does that look like? It looks like the difference between an IUL and creating your own mix. An IUL is our ideal flagship product. If I believed in magic, what I don't believe in magic, I believe in miracles. But if I believed in magic and I had a wand, I would want to wave it and make sure everybody was eligible for an IUL. But let's be realistic. At age 60, an IUL of $100,000 or $200,000 death benefit would run you somewhere between $600 to $800 a month. And most people that I talk to at age 60, because maybe they're coming out the gate a little bit late, they don't have the $600 to $800 a month sitting around. Or they don't even believe that it's possible to have the $600 or $800 a month. But what you could do is you could do a term for 15 years, which could cut that in half, $300,000 to $400,000 a month, and get $500,000 in death benefit. I don't know about you guys, but don't you think $500,000 a month in death benefit is better than $100,000 to $200,000 a month in death benefit? I hear you. Somebody just said, why do I care about what I leave for them people behind? Them jokers don't come and visit me no way. There is something to be said about a higher death benefit when you are in the right insurance policy. Your higher death benefit will give you a higher living benefit. Give you an example. If you're able to access 80% of your death benefit, do you think 80% of 200,000 is more than 80% of 500,000? No, it's not. And we have to stop letting people come into our space and just kind of going into the back of the store looking for the sale and choosing things as if it has the best price tag on it. We have to look for what's best for us in the long run, because remember, today is the best day of our life. So if I have a $100,000 death benefit, my $80,000 living benefit probably will be gone within a year. But if I can set myself up with some cushion of a $500,000 death benefit for a lot lower price tag, and I just did average, and I actually used numbers for men, so we know that women, their rates are usually lower. Don't quote me on these numbers. These are just examples. But even if you got a guaranteed life issue at $100 a month to $200 a month, you could get a maximum of about $25K. That's enough to bury you. And then you can mix it with an index annuity flow, which means that you flow the money into the account and you do it for approximately 15 years, and you set aside $200 to $300 a month, and you'll probably get somewhere around $500 a month for the rest of your life. You have created a whole nother income for yourself that you can add to those pool of resources that we talked about earlier. I'm gonna move away from this screen real fast because I know somebody's trying to take a picture right now so you can hold us to this. Remember, these are just examples. Why does any of this matter? One, it helps you avoid being underinsured. Being underinsured is a really sad situation. Having an insurance policy, but not having enough to do what you need to do with it, to either bury you without stressing, to either have living benefits without sometimes when you don't have enough to live, it can cause you to check out a lot sooner than what you expected to, because you lose hope. How about providing you a clear and calculated path for retirement income? Either it could be your initial retirement income, or it could supplement something that you already have. This matters because it gives you peace of mind that your loved ones will be financially protected. And sometimes they'll be financially protected from you as well. How many of you know that it's hard when you already have your ducks in a row and then someone who's close to you gets sick and they can't take care of themselves, and now they're your responsibility? So we need to give peace of mind to our loved ones so that not only will we be financially protected, but they'll be financially protected as well. So what are your next steps? What is it that you need to do? One, you got to get with the agent who invited you. Don't wait, because time is not your friend. That's why I didn't leave those numbers up, because we have specialists who can show you exactly what your tailor-made specific plan of action would be. Get with the agent who invited you to this platform. Don't wait, because time is not your friend. You need to have a sense of urgency in creating a plan of action. Don't get around to it. If you're taking notes as Kimberly asked you to, then I want you to write the word TUIT on that paper. TUIT. You have it? Now I want you to put a circle around TUIT. All right? So there's no need for you to get around to it because I just gave you one. How about that? Now you have around to it, so you can just take that off of your things to do list. I want you to have a sense of urgency with your agent in creating a plan of action, because time is not your friend. And then the third thing that you want to do in your next step is that you want to do something. You want to not just have the plan of action. It's not just for you to look at. It's so that you can implement it. Because guess what? Time is not your friend. Insurance, remember, or a creative plan of action through an annuity is for income replacement, lifestyle protection, wealth transfer, legacy building, and creating lifetime tax-free retirement income. And guess what? Even if you have to go the route to do an annuity flow and it's not lifetime tax-free income, what's wrong with getting income that's taxed? You've been doing it all your life anyway. But I think the mentality that we have is that we would rather take the whole of a grape instead of the half or the portion of a watermelon. We got to get out of the mentality. You know, I hear it all the time when people say, you know, well, I can't make any more than XYZ or they're going to cut my Social Security. And my question is always, if you made 6 figures a year, would you care if they cut your Social Security? I would probably send the government a pair of scissors or a razor. Well, maybe not a razor, because then they'll probably think that I was, you know, trying to do something crazy. But I would send them a pair of scissors and an invitation to cut my Social Security if I knew that I could set myself up for more. We have to change our mentality. We have to stop going after the whole of the grape and start to look for the portion of the watermelon, or the portion of whatever. Is there a bigger fruit than a watermelon? Because some of these watermelons are kind of small these days. But you understand what I'm saying, right? So you want to get with the person who invited you. I know I hit it and I quit it. I'm going to yield back my time because I don't need to talk a lot. We just need to get into action. I want to say thank you so much for those of you who have joined and listened, not because I needed you to, because we needed to be able to pour into you. And today will be the first day of the rest of your life, making a difference, knowing that there is life after 60 regarding your retirement. Thanks for allowing us to share this information with our community, and we're looking forward to seeing you very soon. Giving it back to Kimberly. Take it away.
Wow.